Alrighty, what's going on, everybody? Welcome back to another quick CYPRX weekly video breakdown. We're just going to be going over the entire cryptocurrency market capitalization, talking about some positions, talking about repositioning of some order flow that we've seen over the past consecutive couple of trading sessions. Let's just go over the past 24 to 48 hours. So in yesterday's breakdown, I had given to you all where we had been talking about the overall atmosphere in the digital asset space. Give me a second. Let me just pull up. Okay. We had analyzed and we had been talking about what created the most recent sell pressure in the digital asset landscape over the past couple of trading weeks. And we know that one of the main drivers of risk off sentiment creating a dampening effect in the digital asset landscape has been this ongoing geopolitical escalation. Obviously, of course, outside of an uptick in inflation and an elevation in overall US data, upbeat US data showing a resilient and strong US economy, and hawkish Fed commentary, one of the key factors dampening risk market mood has been the Middle East tensions. Okay, and I'm just showing you all a mainstream article here. You can see this is back from April 12th. And if we go back and we correlate those dates in the digital asset landscape, we can see that that is where some of the sell pressure that we've most recently experienced in the digital asset landscape came into fruition. Now, even in our pre-planned analysis last night that I printed for you all, one of the key things, the focal points in which I said will need to happen in order for us to see a bullish recovery in risk assets, primarily focused on, I mentioned that we will need to see an improvement in risk sentiment driven by easing tensions in the Middle East. All right. And so today, one of the things that took place in the digital asset landscape was we got those easing tensions in the Middle East. All right. So I'm just going to go over the 48-hour update. I sent you guys that in the El Chapo chat. So you all are more than welcome to open that up and read along with me as we go over this. And then we will go over some XRP price action. And then we will go over fundamental data for tomorrow in depth, how to potentially react to the data releases. Give or take, the data comes out upbeat, higher than previous readings, or higher than forecast, and how to potentially react to that data if we get the inverse, showing some downbeat figures below previous readings or below market forecast. All right. So overall, the cryptocurrency market today saw a noticeable uptick with the total cryptocurrency market capitalization rising by about 2.65% over the past day to 2.38 trillion on April 22nd. Leading this surge are top cryptocurrency assets, obviously, of course, like Bitcoin and Ether, which rose by 2.40% and 2.80% respectively. Now, the return on risk sentiment last week, we know geopolitical tensions in the Middle East weighed on the cryptocurrency market. However, the recent gains coincide with the return of a risk-on market mood across traditional markets, and that is as of time of recording. Remember, that could all potentially change this week, given the fundamental data that is set to come out, i.e. US data, any escalations in geopolitical tensions that we could potentially see throughout the week, which we need to be paying attention to. We know if we see any Middle East tensions, could potentially create a dampening risk off market sentiment and drive more demand for safe haven. And then obviously, of course, the inflation data that we're set to see at the end of the week. So with the worries over a wider Middle East conflict subsiding, investors are scaling back safe haven trades in favor of riskier assets like equities and cryptocurrencies. As the risk of imminent retaliation in the Middle East diminishes, we are witnessing selling activity on gold. This outflow from safe havens, which we can see in the price of gold, tends to benefit risk assets, including crypto. And this is something that we've talked about multiple times in the CYPRX community. When we see an outflow of safe havens, that capital inflow tends to benefit riskier assets like crypto and stocks and so on and so forth. So overall, on April 22nd, the S&P 500 futures advanced by up to 0.33% to 5,031 points, signaling that investors' attention is turning, signaling that investors' attention is turning away from the escalating geopolitical tensions in the Middle East towards this week's corporate earnings releases, notably from big tech giants such as Microsoft, Meta, and Alphabet. Something we need to be paying attention to this week, though, is the strength of the United States dollar and how it's still remaining resilient. As rate cut bets have been pushed back due to higher inflation readings, robust economic data, and hawkish Fed commentary. Investors now are eagerly awaiting Friday's release of the U.S. Personal Consumption Expenditure, or the PCE report, for clues on the prospect of U.S. interest rate cuts. Last week, we had some hawkish Fed commentary from multiple Fed speakers, one of them being Chicago Federal Reserve President Austin Goolsbee, recently mentioning the progress on bringing down inflation has stalled. So now that we've seen one of the factors that I mentioned to you all, we needed to see a recovery in risk assets take place. Obviously, of course, we would like to see that continue, but we would also like to see some of the other things that I mentioned come into fruition as well. So we've seen now an improvement in risk sentiment driven by easing tensions in the Middle East, which is why I tell you guys to pay attention to this stuff. Imagine how many manual retail investors out there, regardless if they're intraday traders or dollar cost averagers, over the past consecutive couple of weeks, had no idea why they've seen a depreciation in their portfolio. And now flip-flop to today, they're seeing an increase or an uptick in their portfolio, and they still have no idea why that order flow is coming back into the market and why we're seeing price appreciation to a minor degree in the digital asset landscape. Here at CYPRX, remember, our focus is to educate you all on order flow so that way we can position ourselves on the right side of the market, understand when's a good time to be dollar cost averaging in or to be taking day trades in specific directions, whether that's to the up or downside. So this goes to show that our pre-planned analysis coincided with, again, why the market uptick happened today. So you all should be well aware as to why prices across the board in the digital asset landscape are elevated. There should be no confusion because, again, we went over this not only in the XRP analysis that I dropped for you guys, but also in the pre-plan analysis that I typed out for you last night, where you can see here, I said, for a recovery in risk assets, we ideally need to see a de-escalation of geopolitical tensions, right? And we got that today. If you go read some fundamentals today surrounding why the digital asset landscape is upbeat, you will see that across the board that we saw some de-escalations amongst the Middle East tensions. Now, to further that bullish momentum, ideally what we would like to see is the US data, particularly tomorrow in focus on Tuesday as our immediate focal points. We have the flash manufacturing PMI, flash services PMI, new home sales, and the Richmond Manufacturing Index set to come out tomorrow during New York session. So reiterating back to the fundamental release and the next set of factors that we would ideally like to see a favorable risk on environment is weaker US data leading to a pullback or reduced demand for the dollar. Okay. So with that being said, let's just go over some XRPTA real quick. Now, I mentioned to you guys that our initial bullish targets from the position that I'm still currently floating in from roughly about the 47,200 psychological level, where in previous week's analysis, I'd mentioned to you guys what we'd be looking for is for price to come back down to the bottom of this range here. And then for us to flip back bullish and start to target these intraday lower highs here, as long as we saw risk sentiment improve, which you can clearly see is starting to happen. In order to see this bullish momentum continue and these trade ideas hold weight, we need to see the risk sentiment improve further. Okay. So let's just go over a scenario tomorrow where the data comes out above market forecast, above previous readings, prompting a risk off market sentiment, changing the sentiment that we've seen today. And I'm going over that first because that's what's forecasted. As we can see here, the previous readings on the flash manufacturing PMI were 51.9. The forecast is set to come out with a slight uptick to 52.0. So about a 0.1 increase. The flash services PMI figures are set to come out increased as well from previous readings at 51.7 to 52.0. Now, let me just break this down for you all real fast. All right. So tomorrow, if the flash manufacturing PMI figures or the PMI figures across the board come out elevated or robust, higher than previous or higher than forecasted readings, when PMI figures are higher than previous readings or exceed market forecasts, let me put this in a way for you all to understand. It indicates, we have to understand what it indicates. It indicates a stronger economic activity in the manufacturing sector. What could this mean? This could mean increased production, higher employment, greater overall economic growth, and such upbeat data typically drive strength for the United States dollar because it suggests a healthy economy, which attracts foreign investment and boosts confidence in the currency stability. So, as a result, investors, if we see elevated readings tomorrow on the PMI side of things, may favor the dollar, which may lead to its price appreciation, which again would most likely lead to a risk off market sentiment or a dampening of the current risk mood. Okay. Second, we have the new home sales. All right. So we can see previous readings at 662,000 with a slight increase market forecast coming out at 668,000. So when new home sales, if these readings do come out tomorrow or print, when the actual reading comes out higher than forecast or higher than previous, if the new home sales in the US are higher than previous levels or surpass the market forecast, we have to understand what it signals. It signals a robust housing market and overall economic growth. Increased home sales indicate things like consumer confidence, job growth, investment in the housing sector, which are all positive indicators for the economy. Upbeat data on new home sales, therefore, could then drive strength for the dollar because it reflects a healthy and growing economy, which again attracts foreign investors seeking stable assets. And then this demand for the dollar can then lead to its price appreciation against other currencies as investors seek to hold it. So, therefore, leading to a risk off market environment. And then last but not least, we have the Richmond Manufacturing Index, which again, albeit, yes, it's still in negative territory set to come out via the forecast, but it is set to come out with a slight rebound from previous readings at negative 11 with the forecast reading of negative 7. So any rebound or optimistic perspectives surrounding the Richmond Manufacturing Index, along with any upbeat figures on the PMI front or new home sales, we have to understand what robust or rebounded figures in the Richmond Manufacturing Index means. So, with that being said, if the Richmond Manufacturing Index, which is the health of the manufacturing activity in the 5th Federal Reserve District, which includes, I believe, off the top of my head, states like Maryland, Virginia, North Carolina, South Carolina, and parts of West Virginia, when that index is higher than previous levels or exceeds market forecast, even though the numbers set to come out still in negative territory, it suggests increased manufacturing activity and economic growth in that region. Upbeat data from the Richmond Manufacturing Index can therefore drive strength for the dollar, as it would indicate, if we see robust or elevated figures, a thriving regional economy, which again attracts investment, bolsters confidence in the US dollar and its stability, and obviously, of course, would most likely lead to demand in the dollar, prompting a risk-off market sentiment, ideally. Okay? So really breaking those figures down for you guys, that's our main focus for tomorrow. If we want to now see, let's flip-flop, a further increase demand for risk assets, risk on market sentiment, we would then want these figures to come out what? downbeat. We would want these figures to come out lower than forecast, or even preferably lower than previous, showing weakening in the US economy, dwindling economic activity, which would most likely lead to what? It would most likely lead to a dampening in the overall sentiment and strength, driving demand for the dollar, creating a dollar pullback slightly from its most recently elevated or uptick levels, and further boost demand for risk assets as investors, when the dollar depreciates, tend to find assets to hedge against that depreciating dollar, which tends to create a risk on market environment. Okay. So tomorrow, if we want to see, and again, this is just as an intraday trader perspective, whom here at CYPRX, we focus on these immediate fundamentals and how they impact the market. Okay. Ideally, tomorrow, for us to see the three scenarios that I mentioned to you guys play out, which were a deep retracement buy scenario down into the 49 to 48 cent range, which as of right now, I don't see that happening over the next 24 hours. Maybe potentially digging into Friday, we could see that as the market starts to potentially price in some elevated inflation readings. Scenario number two, a slight retracement down into 50 cents to 51 cents for better buys, or just continuation buys from these current levels to target the 57 to 56 cent range, coming and taking out these highs to the left-hand side, ideally tomorrow, for either of these scenarios to play out, or for us to see any further price appreciation in the cryptocurrency market cap as a whole, not just focused on XRP, but since we're intraday traders on XRP, we're paying attention to this pair. Ideally, we would want these figures to come out downbeat, below market forecast, preferably below previous readings, weighing on the strength of the United States dollar, signaling cracks and weakness in the US economy. Okay. Be prepared for the inverse, which is the scenario that I went over first, which is elevated readings, showing a robust US economy, a resilient US economy, and strength in each of these sectors, driving demand for the US dollar, prompting potential further outflows of risk assets. Okay. In a scenario like that, I don't think that we would see anything significant via a drop in price, maybe just a slight pullback, failing to break the previous highs. Worst case scenario, we do see risk off market sentiment. I don't think that that's going to create via these upbeat figures, if we did see them, a full correction of this previous bullish move. But we could see a failure to break these previous highs over to the left-hand side and start to see a retracement to then potentially start to look for those setups that I'd mentioned, where we could be potentially be digging back into these lower areas for better buys, so on and so forth. Okay. So just be paying attention to that tomorrow. Tomorrow, that's our immediate focus. I will type something out for you guys. I'll give you guys all the information breaking down what each of these data points are, what they mean for the US economy, and how either them coming out positive or negative could potentially impact risk assets, so on and so forth. Now, another thing that I want you guys to be paying attention to, and by the way, I just want to also pull up a fundamental report real quick. So if we go down here, remember I told you guys, if you click on the little economic indicator folder, you can see, let's go in and let's just find a report real quick. All right, so here you can see a report. I'm not making up that the Middle East tensions are de-escalating. You can see right here, gold prices dropped more than 2% to a one-week low on Monday as worries over the wider Middle East conflict start to subside, prompting investors to scale back safe haven trades in favor of riskier assets, right? So we are starting to see some of those fundamentals unfold that would favor a more risk-on market environment. Now, another thing we can see here, the US consumer sentiment may not be resilient for much longer. So we're starting to see reports come out of potential dwindling US economic activity, which again is another one of those factors that I mentioned in the pre-plan analysis that we would need to see in order to see a rebound in risk assets or any further or continued strength. Last but not least, forward looking into Friday, I know we're not there yet, but it's still good to talk about. The most ideal scenario for us to see a rebound in risk assets and a recovery from the sell pressure that we experienced starting back in the middle of March when we had upbeat and higher inflationary readings come out, where we started to see investors take profit off that change in market sentiment that the Federal Reserve might not be anywhere near cutting interest rates in 2024, ideally on Friday via the core PCE price index that we're set to see come out, it would be beneficial for the risk asset class as a whole, i.e., in this case, looking at crypto, for those figures to come out with cooler inflationary figures or lower than previous figures. If we could see that happen, in my personal opinion, lower inflation readings would most likely lead to a correction of this previous bearish move in risk assets, breaking above these previous intraday lower highs, and seeing further appreciation in multiple digital assets across the board. Okay. That would be if we saw lower inflationary readings. Would be the icing on the cake if we did see some dwindling economic figures from the US weighing on the strength of the dollar, coincided with de-escalations and geopolitical tensions, so on and so forth. All right, so I just wanted to give you guys a 24 to 48 hour market wrap up as to why we've seen an increase in risk assets, because again, those factors could potentially shift hands again tomorrow if we see robust or elevated economic activity, driving demand for the dollar, weighing on risk sentiment, as that would most likely push back the rate cut narrative even further and show signs of resiliency and strength in the US economy. All right. So let's just be paying attention to these factors. Tonight, I'll give you guys some further screenshots of some trade ideas on multiple forex pairs and also an update on XRP, albeit there is no real update as of right now comparative to the previous analysis that I gave you guys. Still looking for these potential trade ideas to play out. We are hovering at around that high 53 to 54 cent range right now. So if we do see any breakout or volatile price action from the previous high to the left-hand side, I will be looking for some intraday entries to ride the wave up into roughly around 57 to 58 cents, which is trade idea number one, breakout buy scenario. So just be paying attention to that. And other than that, obviously, of course, let's monitor these fundamentals tomorrow and see how the market reacts. Many blessings to you guys. If there aren't any questions, then I'll let you guys go. That'll be our report for the evening.